Okay, don't kill the messenger. Tax day may be months away, but there are still plenty of moves you can consider before you have to pay the taxes. So we got a way to manage your tax bill. In fact, there are certain actions you should take before the year ends so you're not missing out on any important tax opportunity. So how do we do that? Well, here are some tax planning tips. Is Jim Lineweaver and Mark Sipos from Lineweaver Financial Group. Great to see you guys.
Good to see you.
Everyone looks good today. We're all dressed up, right?
Yeah, you didn't get the memo, but a good team dresses together as well.
There you go. Hey, so we're talking about taxes. Why is it important to think about taxes now? We're so far away from April 15th.
Well, the problem is you got to get them in by December 31st, or you'll miss any of these additional deductions that you can take that we'll talk about today. So some of them are if you own a business, a lot of times you can push some income into next year if you want, or if you have some additional cash that you're going to pay taxes on, you could actually use what's called a 179 deduction to maybe get bonus depreciation on any equipment you buy, or also things that you can write off immediately, so it'll lessen that tax burden come next April.
Hey, so you're talking about equipment, you mean like office equipment, that kind of stuff?
Yeah,
So it doesn't have to be a bulldozer or a tractor or something like that?
No, it can be computers, things along that nature. What you also want to look at, it's been kind of a volatile year, so you can look at tax loss harvesting. Because remember, that magnificent 7 in the S&P 500 are all those technology stocks that's carrying the market, but it hasn't brought a broad breadth to this market this year. So if there's some losses in there, offset them against some gains, and you can carry up to $3,000 in losses over. And then also, if you haven't maxed out your 403B, 401k retirement contributions, you still got a month left. So if you have some additional savings, then why don't you go ahead, up your 401k contributions, and then just spend that savings so that you can get some more federal and state tax deductions before the end of the year.
So this sounds like there are tax strategies we should be following or looking at.
Yeah, Jim mentioned contributions to retirement plans. I'm going to talk about distributions. So once you're nearing 73, the IRS is going to make you take out required minimum distributions. Not saying you're getting there yet, Dave.
Oh, I'm by it. I'm past it. You just reminded me of an ugly thing.
So when you take those distributions, you want to have a plan in place for that extra income. And also, you might want to take traditional IRA money and roll it over or convert it into a Roth IRA, which could help your RMDs in the future, and those grow tax-free as well. But that gets included in your income, so you have to be careful that you're not going to up your Medicare premiums or your tax bracket or other tax deductions.
Wow, that's really an important thing right there. Like you said, like if you just go a couple bucks over into the next bracket, it's going to cost you many bucks.
This is a ripple effect, and that's what you got to be careful about. That's why one of the busiest times of the year for Mark is the end of the year, because that's when we do some pro formas to make sure that our clients don't have a lot of surprises come next April.
Yeah, so I mean, this is way different than a lot of things we talk about all the time. I mean, this is like you're going to war.
Yeah.
And you gotta load the cannon and all the rifles now, because once the new year starts, you can't go backwards in time.
Not at all.
Yeah. So what about, I heard some people like at the last minute talking about giving money to charities. How does that help somebody?
Well, this is a great way to do it, and this is why you need coordination with your financial advisor and your tax accountant. Because if you look at your portfolio and you had some highly appreciated stock, you can donate that to charity. So if you paid $10,000 for it and it's worth $20 now, you can gift the $20,000 in the stock to charity and get the full write-off of the $20,000. You don't have to pay the taxes on it, but you get the full.
So how does that save you money? Does that mean you can afford to give that away to get your tax? Or how does it end up saving you money? And you just gave away $20,000.
Yeah. So, and it only cost you 10, but you'll be able to write that off of your tax return. So you get some leverage out of that. And we also use a lot of donor-advised funds for our clients that maybe want a perpetual gift, so they can donate cash or appreciated securities to this, and then we can help them manage it. But then, if they want to make a contribution this year to a charity and a contribution next year to a charity, it can all come out of that contribution that you made.
I'm sure you work with a lot of people who are successful, or they're new to success and they're starting to get money. What are some of the easy, like, you should have done that, you should have done that, you should have done this, things that come to mind right away? Like, when people are going to call after this segment, call you, what are some of the things that you're going to help them with that they're going to, like, wow, I never thought of that?
Well, like a good example of that would be if, again, like you said, they're maybe making more money than they used to, so you want to fully fund those retirement plans to the maximum that you can to defer that money into when you're in a lower tax bracket in retirement. And going back to the charitable deductions, once you hit 70.5, you're allowed to take a qualified charitable deduction, which is a distribution right from your IRA right to the charity, and you don't pay any tax on that distribution. So you get a tax write-off without having to itemize your deductions.
Yeah, so what we learned here is there are a lot of things you have to learn and can find out that can save you money. So I think it's probably a good idea to get in touch with the professionals to do that. So along with so many moving pieces there, you don't want to get behind on your tax planning, and you guys can help them out. There it is right up there, the Financial Quarterback Jim Lineweaver and his big crew of folks. I've been there. I tell you what, those guys are busy as bees over there, and what they're doing is try to help you. And you don't get behind on your tax planning, and that's why it's so important. So thank you very much for joining us today.
Thank you. Great seeing you.
Appreciate it.
Thanks for
you
having
guys look
us.
good today, too.
Next time we'll give you the memo.
Yeah, coordination. That's right. Coordinate your clothes and your finances.
Right.
Exactly.
And don't
Perfect.
miss the Financial Quarterback every Sunday. There you go.